The huge story this week, gold, touching $1,300 an ounce, closing today at yet another record high. It's up 30% from last year, fueling debate over just how high this metal can run. Our all-star panel is back with us, Jim LeCamp, Michael Cucino, and Peter Schiff. Peter Schiff, you are the big bull on gold. Explain why.
Well, you ain't seen nothing yet, and I don't have to explain it. I'll let Bernanke explain it. The Fed has now laid its monetary cards on the table. The Fed has claimed that its new mandate is to create inflation. The old mandate was to create price stability, but the Fed now views stable prices as a problem that it's going to cure by creating inflation. And, the Fed has an abysmal record of failure, but unfortunately, this is the one time it's going to succeed. It's going to create a lot of inflation, and that's why people are buying gold. That's why it's hitting a record high. That's why silver hit a 30-year high today. And these metal prices are going to keep going higher and higher as more and more people figure out that the Fed is going to rob them blind. But, it made the mistake of letting the cat out of the bag. It actually is telling us it's going to rob us.
Okay.
Well, if you don't want to be robbed, buy gold.
I want to bring people into the process here. If they missed what happened earlier in the week, Jim LeCamp explained the Federal Reserve put out a statement, and they made very clear that quantitative easing is a kind of an obtuse term. That means they would go out and buy treasuries. A lot of people say that is extremely bullish for gold, right?
It is. They simply create money out of thin air. They print money. And it's not just the Fed that's doing this. The other big news of the last 2 weeks has been that in Japan, they're going to print yen and sell yen out in the marketplace. So you're seeing currency destruction going on all around the world. There's another thing at play here. In China, they want more power with their currency. They want to be a bigger player on the world reserve currency format. So they're allowing their individuals now to buy gold for the first time. They're creating ETFs over there for gold. The one currency that you can't print more of around the world is gold. You can exchange it for any of these currencies, but you can't print more of it. And the gold mining companies say they can't even find more of the stuff. So we're very bullish on gold.
Michael Cucino, are you encouraging your clients to buy gold?
Not only encouraging, but we're doing it ourselves. I would agree with everything that's been said in the long term. I think gold is reacting to, gold is representing investors' views of monetary policy around the world right now.
But how much of a portfolio, really?
Well, we use a target of about 20% in our fund. So, depending on your investment objectives, you might do a little bit more, a little bit less. But that's where, roughly about a fifth of our portfolio we've got dedicated to gold.
But, Peter, here's what I understand. If I look at the price of gold in inflation-adjusted terms, I'm nowhere near the record from, the late 70s, early 80s? It hasn't really kept pace with inflation thus far. Why would it be a protector now?
Well, you remember you had a huge 20-year bear market, so gold had to dig its way out of a big hole. 10 years ago, we were buying gold for under $300 an ounce, so it's now quadrupled. But that's a good case to show that gold is still cheap, and I think it is cheap. Based on all the money we've created and all the money we're about to create, gold is still a bargain. I hear a lot of talk about a gold bubble. I heard talk about a gold bubble in 2006 when gold was at 600, and I heard it years before that. If you look at gold stocks, the HUI index, the HUI, is actually lower than it was in March of 2008 when gold was at 1,000. You've had a 30% rise in gold. Gold stocks haven't gone up. That's a sign that the speculative money hasn't even come to the party yet. People are still afraid to buy the gold stocks.
If somebody wanted to buy gold, what is the best way to do it for the average person watching?
Well, right now, I'd buy the stocks. I think
hold on. Let me ask Jim. We'll get you in, Peter. Don't worry.
Typically, the gold stocks follow the gold price move, and then you get the junior miners. And if you really want a high beta play, if you really want a lot of action, you buy the junior mining companies. But I don't think you even have to do that right now. The major mining companies are doing extremely well. The Newmont Minings, American Barrick, Eldorado Gold, Randgold Resources. And I wouldn't ignore silver, Michelle. That, as Peter said, it's hit a 30-year high. A lot of these stocks are really moving too. We liken silver to gold's crazy little brother. It usually comes along a little bit later, but when it moves, it makes a much bigger move. So we like silver as well.
Michael Cucino's got 20% there. Would you go as high as that?
We're a little north of 20%, particularly now that we've mixed in the base metals here. But look, you can use stop losses. You can get out of these things very quickly. It's a great reason to play the equities instead of buying the bullion and sticking them in a safe deposit box. I don't have any problem if people want to do that. I just like the liquidity and with portfolio management.
It all sounds so black helicopterish. I don't know, Peter Schiff, 20% more. How much have you got there?
Well, personally, I have better than 50% of my personal stock portfolios in gold stocks. It's been that way for 10 years. The problem is the gold stocks keep rising. I have to buy more other stocks to balance it out. But, for my clients, it's more conservative. But almost everything I recommend for clients is foreign. So we have inflation hedges by being in foreign stocks. I have a lot of weighting in emerging markets. We have a lot of money in China. We have a lot of commodities. Everything that I'm doing is to guard against the Federal Reserve stealing my wealth, which is exactly what they're going to do. I mean, the government is going to spend trillions of dollars, but they're going to steal that money from savers. Everything that they save is the money everything the government spends is the money you're going to lose if you're foolish enough to keep it in dollars.
And Michelle, during the Great Depression, every country had this issue again, and everybody started these currency wars during the Great Depression, and pretty soon everybody devalued their currency against gold. The same thing is playing out right now. You have all this currency destruction going on around the world. You have currency jockeying between countries, and pretty soon we may be looking at the same thing, a massive
Rick Santelli talks about it a lot. But Michael Gugino, is there an exit price you say, okay, if gold gets to here, we're going to take off some of that position?
No, there really isn't. I mean, we think it's prudent to have an allocation to gold at all times for exactly the reasons that are given. So, I mean,
what do you think about these investigations that are going on? Any of you have opinions about Congress investigating some of these gold companies or some of the ETFs?
I have my own gold company, and it bothers me what they're going to do. I think the companies like Gold Line, that are basically marking up their gold coins, 67% or whatever. It's outrageous. I mean, most companies mark up 2 or 3%, which is what I do. These type of companies give the whole industry a bad name. What I'm afraid is we're going to have a lot of regulation.
But you want Congress to investigate them, Peter?
Huh?
I mean, you want Congress to investigate them? I mean, isn't it buyer beware?
No. Well, if there's fraud, it's not buyer beware. But what I'm afraid of is I don't want government regulating the coin industry so that people like me have to raise our prices to cover all the extra cost of regulation. I mean, I think the free market should ferret out these companies that are grossly overcharging people who don't know any better. That's the problem. People haven't bought gold in so long, and then they see how well it's doing, and they get conned by these commercials that are all over television. But most gold companies like mine, we can't afford to run commercials because we're not charging that much.
All right, got it. Instead, we have you on, it feels like. All right, guys, it was fun to spend my Friday night with you. Thanks for joining us.